Hello, good day guys, this is Rstar. So today we're talking about support and resistance. Support and resistance, they also call it the real value because they are designed for you to predict the best area at the market where you can predict market reversals. You can predict market reversals based on support and resistance because based on human reaction, the markets are liable to reverse where it has reversed before, or maybe at the point where there is some kind of reaction like consolidation, ranging, so the market are liable to reverse at that area. So with the use of technical analysis, you can draw out your support and resistance and spot out zones where you will likely predict the market to reverse. So now let's take an example. Now let's say the market is moving up, right, and then it reverses at this point. Now then we have a zone there. If the market is coming back to that zone, and there are two things that can happen there. When the market is coming back to this zone, there are two things that will likely happen. First of all, there are traders who are in buy or buy trade, right? There are traders who are in buy trade. So when the market pushes, all the traders fears that the market is going to reverse and they will start taking their profit, right? If you take profit in the market, if you are in buy order, it means you are selling. If you are in sell order, it means you are buying when taking profit. So your order, taking profit, is the opposite of your order. So that's what taking profit means. So the buyers fears that the market will reserve and start to take their profit. So most people that start to take their profit are selling, and other sellers too will come in because they missed the chance to capture this move at right here. So they also start selling right at that point. And if more buyers taking their profit, then that will create imbalance in the market, the supply and the demand, and you are also going to see the price starts dropping because people are releasing their money, right? So take for example, let's say you have gold in your country. So now someone says the value of gold is going to be worthless, like in couple of few times. So people start selling gold. That means the price of gold will drop. So what happens when most people get into the trade here? The market is going to start dropping. So this level of structure at the level of support and resistance. Now let's go to the chart and see this. Let's go into the market so I'll show you what exactly I'm talking about. Right here we see the market which is strong in a downtrend here. It reversed up, then at this point here, let's mark this point out. You see that it came back to the zone right here and went back, and the market reversed, right? So it's because the people that were selling at this point, there are more people who are in sell order from this point down, and they are making profits here, and then the market reversed here, right? It is because some of them started taking their profits and some put their trade. So some buyers came in and the market reversed up, and when they took their profits, the market came back down to that same level where it reversed from. Then we have more buyers coming in to take their trades from there, and after the sellers feared that the market might reverse there, so they took their profit, and that's why the market went all back. And most buyers from this level also, they took their profits at that area where the market first reversed. So we see the markets went all the way up back, and then the buyers that are in now feared again that the market will reverse at that same area from where it was reversed. Then they took their profit also from there, from that zone right here. So most people who also take their profit here are majorly buyers, so that means they are selling. Then the market moves down because they are existing a buy order, so the market moves down. Now let's mark out these zones right here. So we call this our support and this our resistance. So to mark out the resistance and support are just easy. So you'll be looking for the levels in the market that have reversed before and create a relatively big move. Then you don't want to look at small moves level, right? But whenever you see a market reverse and create a big move, that's where you check out. Then that will be your level of support or resistance, depending on how it is. Let's take the level here, for example, here, and we have it here, and then you see the markets get there reversed and comes down, it break it and reverse at this level here. So as market is reversed at that same point, that's what is called support, and then when it breaks it becomes resistance. So let's find some levels we can use in the market reverse. So here, let's mark out the zones here. You can see this most times, that's when the market reversed, it come back to it. It's either break it, then retest it back and continue, or it break it to the upside. So let me just show you a simple strategy. Let's break. Simple like that. So yes, here the market reversed and went down back, reversed and went back down back. So this how you just draw your support, and it's not complicated, and you just make sure you find the levels where the market reversed and create a little big zone around it. From that point, then you'll be expecting a reaction when your market gets to that point. So these are your supports and resistance levels. So right now, if the market reverses, break into this zone here, we know that there's a chance that the market is going to reverse again from this point. So that will be a good selling point. And also you need to identify the trade. This is drawn down trade, so that's why I'm saying the market comes back in a downtrend, I'm going to sell. So I'm looking for a sell at this point here. So the best way to trade market is with price action in combination with trend, and then the level of structure, just like support and resistance. Thanks for watching. Kindly subscribe to my channel and turn on the like button for more content. Don't miss out. Rstar cares. Thank you.